Okay, thanks for joining me and glad to be here. Thanks again for getting started on time. And we'll go ahead and get the show on the road. I've got my webcam. You can see I'm real. So this is live and thanks for joining me. I just wanted to get this kind of set up. You can see the shutters there into the back here. I should have adjusted the lighting, but that's okay. We'll get through it. You don't need to see me. I'm just going to do a quick introduction and we're going to talk about an incredible trick, and it's really more than just a trick. It's really a whole process and solution using algorithms to select your options trades. These are pre-built strategies with automation for risk and profit management, with hedging and directional and non-directional strategies, of course. So we're going to dive into that, and also the most unique trade alerts you have ever seen. We call those our one-touch trade alerts. All right, let me get this all adjusted here and we'll get the show on the road. We got a lot of material here. Remember, we're speculating and there is always risk of loss when speculating because of course you're trying to make money and there's always going to be risk. So do take a moment and look at that risk disclosure. It is important to pay attention that when speculating, only risk capital should be used and that past performance is never a guarantee of future results. And feel free to use the chat functionality as well and chime in anytime and ask questions, make comments, give me feedback, good, bad, or otherwise. I can sometimes glance over and take a look on the fly. And if I don't answer your question right away, it's probably because I'm getting to it and we'll answer it in the presentation. So let me know how things are going. I need that feedback here during this live event. Okay, a little bit about AltaVest. Since 1997, we've been trading futures and options. We're the registered introducing brokerage firm. That's what we're called. We've been doing this, again, about 25 years. There's yours truly and some of my trading colleagues on the floor at the CME. That was our options trading pit floor staff there. So we've traded tens and tens of millions of contracts over the years, and we're going to show you how we do it and what we've determined works best for us. So you're going to want to stick around for that demo, of course. We trade futures and options, and we are in a highly regulated industry. That means our operations are audited at least yearly. So that is to your advantage, folks. This is no FTX here, and we'll talk about that briefly, but the regulations are for your benefit. We've been doing this for 25 years, so you're working with industry professionals. We're registered with the CFTC, Commodity Futures Trading Commission, also a member of the NFA, the National Futures Association, and we're headquartered in California. And you may have seen some of our presentations on various venues around the internet. We used to do a lot of this live in person. And of course, we're doing a lot of that online now, just like today. And a little bit about myself. I am Eric Gebhard, been doing this about 30 years now. Graduated from University of Southern California in 1991, have my BS in Business Administration, and I started with my license in 1991 is my Series 3 license in the futures and options space. Also, I have my Series 6 and 63 securities licenses in the mutual fund industry, and I currently have the Series 3 and 65, which is the investment advisor law exam. So with that said, the brief introduction here, and then if you wait just a second, you could probably see the cat. She just climbed up on the desk. Who wants to see the cat? Let's see here. There she is. Anyway, everyone likes their pets. So give me a thumbs up if you saw the cat. Anyway, we're going to turn off the webcam right now and move forward now that the introductions are over. All right, so this is what we don't do. We don't day trade individual stocks. That's not what we're trying to do, folks. And we think we have a better way with option spreads. That's what we're going to talk about. And before we jump into the demo, What are the 3 common barriers that you can relate to when it comes to trading? Well, we have identified these based on all of the feedback with thousands of clients and decades of experience. Too much noise. And I see people commenting on the cat. So thank you for that. Cats are always a hit, aren't they? People love their pets. So social media. Are we listening to too much noise and social media? That's storytelling, that's narratives. And unfortunately, it turns out that the most popular source of investment ideas for younger investors is social media. So this is the type of trading advice a lot of people are getting from the internet. And Wall Street Journal even commented earlier that staying popular online means you never criticize a stock, especially a meme stock. So a lot of times people are getting their information online, unfortunately, and this is what they're seeing. So really a sad state of affairs there. But it looks like that day trader army that made a bunch of money during the pandemic lockdown is kind of broke now. No surprise there. Now, I don't want to pick on anyone, but let's pick on Jim Cramer. You know, he's a big personality in finance, in the media, and also the crypto personalities. But here he is in March of this year saying the bear market's over. And of course, we've been plunging ever since. And then September 11, he said the market, we've seen the lows. And of course, this is when he said it, and we've been plunging since. Of course, we've had a few recoveries and bounces, but the overall trend is clearly down this year, obviously. Here's Meta. He recommended Meta here and then here. It dropped 20% the next day. So he got emotional apologizing, but the point is, actually, someone even created an ETF taking the opposite position of Jim Cramer. I'm not sure that's a smart strategy either, but the point is there's a lot of noise and you can't just turn on your channel, your TV and take advice from someone. It doesn't work that way. It's not that easy. Even in the crypto space, you've all heard about FTX, that crypto exchange, just a complete fraud. This was the CEO of Alameda, if you can believe that. That's not a joke. And here he is here in their $40 million Bahamas penthouse. Meanwhile, he's claiming that he's into altruism and drives a Toyota. So I don't think anyone believes that. But basically, it was an admitted Ponzi business. So the point is, you need to stay away from what a lot of these salespeople online are trying to sell you with unproven strategies and unregulated markets. There's just a lot of pitfalls in doing that kind of thing. So if you want to play Monopoly in the crypto space with FTX, I think this is this kind of sums it up. These people are hopefully going to end up in jail for doing what they did, committing so much fraud and taking deposits from people. Now, the next barrier, not enough time in the day. So, do you have time to screen watch all day and watch the markets? Your time is limited. And here's just a couple things I captured off the internet here. This person says I trade full time. I sit in front of my computer, market open till market close, watching every once in a while till after market hours. This person says I consume 10 to 12 hours of my day trading. So that's fine if it can work for you, but most people would rather be doing this and they don't have time to do screen watching. So I think it's fair to say that might be one of my favorites when I'm real tired there. So time is certainly something we can never have more of, and hopefully with what I'm going to show you, it'll help. I think you'll see that it'll save a lot of time. But even if you are trading, are you beating the market? Day trading has a less than 1% success rate. Let's see if that's true or not. Charles Schwab analyzed their active trading accounts over a 6-year period of time, and those traders substantially underperformed a simple low-cost indexed fund. And in Taiwan, they ran a 15-year study. 1% of day traders consistently beat the market, less than 1%. Same thing in Brazil. So it's not easy, folks. And the third barrier, really, you don't have that professional guidance or the right tools to help you overcome a lot of the emotions with trading. So we need to learn to control our emotions in our trading. And remember that it can be expensive trying to convince the markets that you are correct. So you don't want to end up like this here. on your tombstone, arguing against prices, that's for sure. There's 5 stages of grief in this bear market grief. I thought this was kind of interesting earlier this year, but it's still valid. Denial, anger, bargaining, depression, and then acceptance. So it's kind of a roller coaster ride here. This is a graph that kind of illustrates that, the emotional roller coaster ride. You know, you're euphoric when things are going well. You are despondent and depressed at the lows, so to speak, and then you get optimistic again. So Motley Fool says we've got these 3 common biases. We can become our own worst financial enemy. I think that's a fair assessment. You have confirmation, anchoring, and recency bias. And maybe this one image here sums it up very well. So when things are going great, we tend to think we're a genius, but let's not fall into that trap. So let's jump in here to the algo portion of the presentation and the demo. Remember, the reason algos have an advantage oftentimes is because they're non-emotional and they are dominating the stock market. According to JP Morgan, 90% of US equity volume is algorithmic or high frequency trading or proprietary trading, whatever you want to call it, machine trading. So this is where we are, folks, in this revolutionary stage of trading. Your competition isn't others just like you sitting in on their machine somewhere trading. It's really a machine, not necessarily a person. This is what it used to look like. I took this grainy video visiting the trading floor on our many trips in New York and Chicago. You know, that wasn't too long ago, but here's what it looks like now. So you have machine driven, as we talked about, non-emotional, automation, built-in risk controls. And with that said, let me jump into the options portion now here. We're going to talk about how insurance companies might trade options and how trading options, like an insurance company, might be a good idea. Of course, they collect premiums to assume risk. They self-insure themselves or reinsure themselves by hedging. And they're just basically selling time using a process and probabilities. And they're simply using math and statistics, number crunching. So how can we do the same thing with premium collection? How do we collect the option premium? These are base hits, or going short an option, collecting that premium. You need to be consistent and patient. And of course, you will have losing trades. So how do you manage those risks? And how do you manage the reward? That's just as important. And you need the proper tools to make this all happen. Again, these are option strategies where you collect premium and you don't pay it. And these are lots of base hits. We're not going for the grand slam on any one of these types of trades. And these trades can be non-directional, bullish, or bearish. And we're going to target outcomes. Everything is predetermined in terms of your risk and reward. These are called credit spreads. Every position is insured for risk, and your reward, of course, is all predetermined as well. And what's really unique about some of these strategies, they can be non-directional. So they can be profitable if the market moves up, down, or sideways, and I'll show you how that works. And we're trading options on stock index futures contracts. These are not individual stock options. And there are big benefits to that, but just the top 3. Of course, an index is always less volatile than an individual stock. And with an index, it's easy to have apply a strategy for any market condition. And you might want to use a strategy to hedge your current investment portfolio or even speculate with a particular direction. So it's very flexible. And then, of course, an index is just one market. You don't have to follow, I think there's something like 60, almost 7,000 securities. So big advantages to doing this the way we do it. And these are futures options on stock indexes. And with our strategies, we're going to show you in just a second here, there's a wide margin of error. You can see the market bouncing around between this upper and lower boundary. So we're going to show you that here in a second. But before we do a real quick review and primer on 2 of the Greeks, if you're not familiar with it, it's simple. Delta. How much does the value of the option change when the underlying asset changes? So that's simply what delta refers to. Traders also see this as the approximate probability of expiring in the money, and that's how we view it. So mathematically, that's really how it works well with our algorithm, and I'll show you that. So what do I mean? So if a delta is 0.25 on a particular option, that means 25% chance it expires in the money, but conversely, there's a 75% chance it expires worthless or out of the money. And delta is always moving. That number is always moving up and down as the underlying asset price moves up and down, and of course as time decays. So it is not the probability of a winning trade. So keep that in mind too, very important. And then theta is time decay. Options are a wasting asset with limited lifespan. And remember, that's referred to as theta as a negative number. It equals 1 day of time decay. So for example, if an option's at 10 points and theta is negative 0.05, the next day after that, the premium is 9.95, and after that, 9.90, and then it drops from there. And this is what it looks like on a graph when you plot that as you approach time 0 towards expiration. The value, the percent of that premium starts to drop and drop and drop and drop, becomes less and less valuable based on time decay. Now remember, if you're only buying stock options, theta and time is working against you. So you're not doing it like a professional if all you do is buy stock options. This is a great little video I came across from I believe an analyst on CNBC. It's on YouTube, I found it. So here she says the appeal for a lot of retail investors to buy options is that they're much cheaper, but your potential for profit is actually not that high. So, and why does she say that? Well, because it has a low probability of success, that's why. And so we like to trade spreads or sell options just like professional traders do. And that's what we're going to talk about. So an option spread is the buying and selling of different contracts. It's a very common way for investors to hedge risk and volatility. And it's usually cheaper because you can offset your costs by the proceeds from different contracts. So she's basically talking about trading spreads. And this strategy has been used by Wall Street professionals for decades. And this is very interesting. I want to really point this out. Last year, 11% of Robinhood active users made options trades, but fewer than 1% actually made a multi-leg option trade or a spread. Okay, so that's you have a very, very unsophisticated crowd, retail trading group, like on Robinhood, for example, trading options. Less than 1% of the options traders on Robinhood are actually buying and selling or doing spreads. They're just buying options and loading up and looking for a home run. So let's look at these professional multi-leg strategies, and we're going to jump into the demo here. So this is selling a call spread, and we're going to show you more, but we'll go over this quickly. The red line is selling a 45.50 call in this example on the E-mini S&P 500, and you collect 4.5 points when you sell that option. You put that in your pocket. But at the same time, you buy a 45.70 call, and you pay money to buy that. You pay 2.25. The net result is you collect 2.25 points, or in this case, $112.50 minus your commissions, and you look for the market, in this case, to stay, generally speaking, below this red line, this upper boundary. And same thing with the put spread. You sell this out of the money put spread, and the net result is you collect $100 minus your commission, and hopefully, in this case, the market doesn't go too close to this lower boundary, and you end up hopefully making a profitable trade. So these are not naked options. Remember, everything we do is a covered option spread. Your maximum risk is capped. No naked creatures allowed, no naked options trading allowed. And here's a couple big benefits, folks. No margin calls. So you don't have anyone telling you that you need to send more money. You don't have to throw good money after bad. And your risk is limited. So do not trade naked options. You do not want to do that. Highly, highly discourage you from doing that. And this, I thought, is a good summary. This woman here is looking apparently at a text message sent to her, it looks like maybe her husband or boyfriend. She's asking, who is Margin and why does she keep calling you? So you do not want those margin calls. Now let's look at an iron condor. It's simply the combination of the put and call spread that we saw. You sell an out of the money call spread and put spread simultaneously, collect the premium from both sides, and you look for the market price to stay kind of in this middle range here. Now here's a variation. It's our own proprietary creation. It's called a dragonfly, something we developed years ago. It has 6 legs. It's for a premium collection, and it's a variation on a condor. And here's what it looks like. And I'll pause just a moment here and explain this. This is what it looks like, the structure for the calls and puts. And let me show you here in detail. You would sell 4 of these particular calls. You buy 3 further out of the money calls, and then 1 closer to the money call. And then you sell 4 of these puts, and you buy 3 further out and 1 closer to the money. So the net result is you collect premium on the calls and the puts, and you're looking for the market to stay in this middle ground here over a period of time. And I want to point out that if you can't quite see it on your screen, this call that you buy in this example is 50 points closer to the money than these that you sold, and this put that you buy is 50 points closer to the money compared to those that you sold. So that creates a completely different risk reward dynamic compared to the condor, and I'll show you that. We have some unique strategies as well. I'm going to just give you an example of a couple of bearish strategies here. Like just do half the dragonfly, for example. So you can see just the call side of a dragonfly, and you sell that call side of the dragonfly, collect the premium, and look for the market to stay below, generally speaking, this area here. And we have something we call a bear hedge. It's simply selling an out of the money call spread, and with that money you collect, you buy an out of the money put spread. If the market drops like a rock, then you end up making money on both sides of that trade. But then here's the question: how do you actually put all these trades together? It can be complicated knowing which market to buy and sell, which strategy to apply, what strikes, what expirations, what's your timing on your entry price, how do you manage your risk and your profits. There's a lot to think about. I think that's Jackie Chan, isn't it? He's perplexed. But the answer here is Theta Trader, folks. Theta Trader is our proprietary software we've developed with our algorithms here. It will build the option spread for you. It will curate what we call theta trades on a daily basis, advanced strategy option automation with these spreads. So bull, bear, flat market conditions and strategies. You talked about how the professionals here are trading spreads. Well, that's what we're doing. And then of course we use automation to monitor the risk and the profit, something called the risk thermal indicator, a simple, effective option spreads and management. So now it's time for the demo. So give me 1 second, folks. I need to switch screens. All right, so I want to make sure you're viewing the screen. Yes, okay. We're cooking with gas. All right, and you're looking at my dashboard now for Theta Trader. And you can see here, you have this top section for Theta Trades. And then you have this section here for open short positions or sold spreads and open bought positions here. And then this is your account info for the demo account. This is pulled directly from your AltaVest trading account. And then current quotes here. So Theta Trader, I want to clarify, Theta Trader is our trading technology and platform, meaning AltaVest. We developed it, designed it, and this is what our clients use to trade with us. So you would use Theta Trader with us at AltaVest. You'd have an account with AltaVest, and you'd be trading on the Theta Trader platform. So I want to make that clear. People always have questions about that because they love Theta Trader. So I want to make that clear. And let me start here. You see bullish, you see bearish strategies, pre-populated or non-directional. And you'll notice here that there are 3 market tabs, or these 3 symbols: the E-mini S&P 500, NASDAQ 100, and Russell 2000. And these are the markets we focus on. And I'll tell you why in just a moment, but just know that this is really where all the activity is in these markets, in particular the E-mini S&P 500. So since we looked at these non-directional strategies, let's focus on today's theta trades for the Condor. You can see there are trades available. The algorithm has generated these for you. It has chosen trades anywhere from 16 to 65 days till expiration. It has pre-selected the strike prices for you, as well as the value of the trade here. And this here is your targeted annualized return at expiration. I want you to keep in mind that this number is only used to compare one trade to another. It's just something, one trade relative to another. And then this is your maximum profit potential at expiration. And we'll just drill down, and typically in a webinar, I just pick the one with the most days till expiration. So we're going to drill down on this trade. Remember, this is what the algorithm has developed for us and created for us. Here's the first thing I like to do is look at a graph. Here's the call side of the trade and the put side of the trade. And here's the current price of the market. And then let me see if I can zoom in just a little more. Does that help you guys and gals? Hope you folks can see this okay. If you can't, let me know. But you'll see, I won't go through every detail, but basically this table here shows you days till expiration, the expiration date, settlement value, premium being collected, your put risk, call risk, commission, capital, cash required, and profit potential, and targeted return on cash, and your targeted annualized return. And then you'll notice the strike prices are already pre-populated. So the algorithm, once again, has done that for us. And if you did want to change the strikes, you could by going through these little buttons here, but of course that sort of defeats the purpose. Now you'll see the put strike here and the call strike that you're selling. Now I want to point out something. The delta is 9.88 on this put. That means there's over a 90% probability that this put option will expire out of the money. And the call option here, the delta is 6.8. So you've got 93+% probability that this call option will expire out of the money as well. So these, looking at these deltas, you have those kind of higher probability outcomes that these two strikes will expire out of the money. And the cash required is 883, maximum profit potential is 116 at expiration. And sometimes people will say, well, you have to put up too much cash to make too little money. But of course, the key is the probability here of these options expiring out of the money is very, very high. So that's the type of dynamic we're looking for on these particular trades. Now you'll see here it pre-populates to a cell, and the quantity always defaults to 1, but we can change it to anything we want, and it changes, of course, the cash required and your profit potential or whatever. So we'll do 5 of these for about $4,400. We'll leave the value the way it is. We'll click on place, and that's it. If this were trading for real, you'd see your order filled here if it were filled, and just that simple. Now let me go back and show you the Dragonfly real quickly. And then I'll show you how all of this is automated with your risk and profit management. Okay, we'll jump into a Dragonfly. We'll look at this January week 3. And the Dragonfly will typically have a lower potential profit. And that's simply because you buy this call and this put, you pay money. So it's like buying extra insurance here. So that costs you a little money, but there's a benefit to that, and I'll show you, make it very clear. But here's a Dragonfly. The margin is about 4,500 in this case, or let's say the cash required. Round up to 5,000 per Dragonfly. Maximum profit potential here about 450. Targeted return on cash just under 10%, and your targeted annualized return 56%. So you can notice that these numbers are a little bit lower compared to the Condor we just did, and that is very typical for a dragonfly, but there are benefits to that. And again, the strike prices are pre-selected. You'll see the delta of 9.88, 6.80 here, and defaults to a quantity of 1. Maybe we'll do 2 of these. You can see the cash required jumps up to just over 9,000. So we're trying to collect this amount of premium, and there we go. Just that simple. Order placed, and then if your order's filled, it gets pre-populated, flows back to Theta Trader, and then it'll track it for you. And I'm going to show you that in just a second. But I want to show you this first of all, the simulator. So you can go backwards in time and compare any trade to any market environment. And I'll also explain these colors here. This will help explain the colors. So I've loaded some of these to help save some time. Let me squish down that screen so you can see it. So here's a condor from April. We can use these buttons to go forward in time. And you can see here when we placed the trade on March 1st, there was 60 days till expiration. And then we're just going day by day forward here through time. Use this button to go backwards if you want, or just play button, or you can go all the way to the end at once to save time. But I just want to show you here, you can see the trade is green, profitable, theta decay is working, and then it turns blue, and that means take profits. So whenever it turns blue, Theta Trader can automatically submit that order for you to close out that position and take profits. So you do not have to screen watch, and that's really the big trick. One of the big tricks to this automated options trading is not screen watching and having to monitor, when to close out that trade when you have enough profit potential and enough profit reached. So you can see here, this trade worked out well. Here's your upper boundary, your lower boundary, kind of a typical condor. Now we'll jump into a dragonfly. So it's the same trade, April end of month dragonfly placed on March 1st. When I say same trade, same expiration. And let's follow this along and see how this did. Okay, interesting. It turned blue and would generate a profit-taking order with 40 days till expiration. And if you go back and look at the condor, it turned blue with 29 days till expiration. So you can see how in this case the dragonfly matured more quickly and allow you to window there an opportunity to get out for a profit over about 11 days sooner than the condor. And that's just because, again, the different trade structure of the dragonfly, you have the 6 legs, not the 4. You own this call and this put, and therefore the theta basically theta decay won't adversely impact you as much. And I'll show you some of these examples here as we move forward. Here's another condor. And by the way, green means good. So the RTI is green, and that means do nothing. Yellow, you can see here yellow, it means it's a little bit of elevated risk. The trade is sitting on a small loss right now, which makes sense because it's moving a little close to that upper boundary. Then it turns orange, elevated risk, and then yellow, back to yellow. And then it turns red. So you take a loss here on that trade. Now, red can be automated as well in terms of your risk management. So if it turns blue and you take has a profit signal, you can automate that. If it turns red for too much risk, you can also automate that. So this condor would have ended up being a losing trade. Now let's look at this dragonfly. Here's the same expiration. This is on January 2. And I'll scroll down just so you can see here, January 2. And this is your March expiration. So here, your March expiration on January 2. Instead of a condor, you did a dragonfly. So you can see it turned yellow, elevated risk, but the trade's actually a little profitable here. And then it turns blue. it gives you a window of opportunity to take profits. Again, the dragonfly has a completely different risk and reward characteristic compared to the condor. It can be much more robust at times and take a otherwise losing position and turn it into a winning position compared to a condor. Here's another condor trade. And I actually forgot what happens here. So you can see it turns yellow again, and then it turns red. You can see why. It gets real close to your upper boundary with some time left, and there's too much risk. Turns red, you take your loss. Now let's look at that same expiration, January end of month on a dragonfly. And look at that, it actually turns profitable with 29 days till expiration. So it gives you a profit taking order here. You can close out that position. The trade's matured enough and you can move on. And this is kind of getting into the weeds, but you can see here, this is your premium collected or captured. How could it be over 100%? Again, sometimes that can happen where you own this call option. So it's gaining in value at a higher rate. The delta is higher compared to the others that you sold. So at times you can have a situation where a dragonfly ends up allowing you to collect more, end up collecting more on the trade than what you originally received. Sort of an interesting dynamic. And of course, we talked about the bear hedge briefly. So if you are bearish, you could sell an out of the money call spread, buy an out of the money put spread. If the market drops like a rock, of course, this will do well. Don't worry about the colors on this one here. But you can see this, of course, worked out well. Nice profitable trade. And if it ran the other way and went up against you, then you would get a signal to close out that short call spread. So that's how that would work. But one of the big advantages on the bear hedge is you can often do those for no cost or even a credit. And I'll show you that in a second. But you go under my account, under settings, and you check this box here to activate the risk manager and activate the profit directive. And then you save your settings. And that's all you have to do. And the RTI will automatically monitor your positions and then issue those signals for you automatically and close out that position for you, or at least send the order to close out that position for you automatically. And then we also have daily research. I want to point that out, something called Trade Scope. And this helps inform you as to what types of strategies you might want to use if you're bullish or bearish or non-directional. This is only for our clients. We provide forward-looking guidance as well. So that's done daily. And then we also have something called the daily commentary, which is more of a narrative. You get quotes and any new trades for the day. You get a review here of what's happening in Asia, in Europe, and the US, looking ahead, technical support resistance zones, and then an economic calendar. And this is really nice here too. If you go under my account to help, you see this help file. And this is nice here, this glossary. There's a review here, of course, of all the different acronyms and symbols if you need that. But this is nice here. You have a color coding on the RTI and explains how that works. You have all the strategies here, all defined for you as well. That's all available within ThetaTrader. And also these are all videos. So there are tutorials here with videos on how to use each feature in ThetaTrader. But you saw how easy it is. It's very simple. And then here's education as well if you need a review or a brief refresher on options trading and spreads. But I want to go back and show you here. You can look at all your open positions on the dashboard like this, or you can look at them all on one page. And I'll show you how to do that here. Okay, so you can see there are 12 short positions and 3 long or bought positions here. Gives you a summary of all the positions. You see color coding here at a glance, and it's not uncommon for a trade like a dragonfly or a condor, for example, to initially be negative in terms of the P&L, because again, you need theta decay to start working. So any of these trades that we just placed, they take a little bit of time to mature, but this is how you can look at it here. If you want to look at something that is, I don't know, let's look at this particular trade here with 44 days till expiration. You're just going to click on it, and then you can kind of drill down and go backwards in time and look at it from the perspective of the first day you placed it. So here you go, you placed this on October 13. It had 79 days till expiration, and everything is looking good. It's probably getting very close to maturing enough for an exit signal, actually. But yeah, so green RTI, do nothing. Just let the trade mature. And then you can look at closed positions here if you want to look at your trade history. So you see a total of 20 on the page, 17 winners, 3 losers. The short positions, there were 15, 14 winners and 1 loser. And that makes sense because again, these deltas that are being sold typically have a very, very high probability of expiring out of the money. But you can see here just a summary. And these are just trades from the demos I'm doing on the webinars. I don't put any thought or effort, as you can tell. I just kind of randomly choose and select trades. But I want to point out one thing here, and I want to jump to probably the best feature of all. So bear with me, folks. I want to point out that if you bring your opinion to Theta Trader and you are, for example, very, very bullish, then you simply go to the bullish tab and you can choose from any of these strategies here. And maybe you want to do a bull hedge, which is the opposite of a bear hedge that we talked about. And you can see here, the algorithm has generated all these selections for you anywhere from 9 to 35 days till expiration. And you can get an overview here. So you'd actually be buying this call spread and selling this put spread. So that's how that works. And you could do this, it looks like, for a small credit here. And you can change the quantity any way you want and then place that order. Just that simple. Of course, we at the moment as a firm, we are positioned in our bias as bearish. We think there's a lot more pain to go. I think we're in recession and we have not made lows yet in the stock market. And I'll show you a little bit about that in the next few minutes. But I just wanted to point out how easy it is to bring your opinion to Theta Trader and then use these very flexible option strategies and then have them automated for you in terms of how to exit them. So that's a really, really big advantage. Here's interesting thing to do. You could just do half the dragonflies, for example. I mentioned that maybe 15 minutes ago. And then I'll point out one other thing, and I'm going to jump to the last segment here I want to show you. But you can see just the call side of the dragonfly. If you wanted to do that, and just for kicks, why don't we do 2 of these here? You're trying to collect 5 1/4 for each one, and there it is. And then one thing I should point out too, I'll make it clear as we go, but if you're doing the types of trades we just showed you in Theta Trader with, say, condors or dragons or even any call spreads or what have you, put spreads, the trade will always be closed out before expiration. I mean, very, very rarely have I seen a scenario where a person's going to hold, or Theta Trader will actually hang on to a position at expiration. So you're either going to have a blue or a red RTI before that trade expires. So just wanted you to be aware of that. Here's NASDAQ. You wanted to do that if you're neutral. Here's the Russell, NASDAQ, so on and so forth. And there are other things you can do with condors other than selling them, which obviously would mean you're buying them. And we've done that a few times. If you expect a large move in the very near future, you might want to buy a condor. Maybe you want to buy a condor because you think, the Fed may make a mistake or something and make a policy error, and the market might overly react one way or another. You could certainly buy a condor, but that is a lower probability outcome. So in this example, you'd be buying this call spread and buying this put spread, and it would cost you 2.5 points. We'll just do one of those just for kicks, and just wanted to point that out. It's a very flexible, go anywhere platform with all these option strategies that can be utilized in any way you want. So here is really the best feature of all, and I'm going to shift over here. Okay, let's see if we can make this easier. I think we can. These are the trade alerts that are part of the Theta Trader platform. These are quite literally one touch, 1 minute trade alerts where you just touch, accept, or reject on your smart device, and that's all you have to do to have that trade executed, or at least that order placed. So these alerts are live, meaning they're integrated with your AltaVest account. So you touch accept, and the order is placed. So here's an example. You'll receive a text message with a link. You just touch the link, and it takes you to the alert page. So you can see up here, there's a brief description. This happens to be a condor. And there's a graph. You get to see what the trade looks like. Oh, excuse me, folks. I'll point out here, you'll see the premium being collected, the cash required, and if you can see here on the screen, the quantity is pre-selected for you. All the trades are pre-sized, and every trade is tailored and customized for you and your account. You will not receive an alert on trades that are redundant. You won't receive an alert that concentrates your risk at any particular expiration or strike price, and all of the trade sizes will be basically in correspondence with your account balance and your available cash. So I want to point that out. That's a huge, huge benefit here. And you can see 71 days till expiration, targeted annualized return. Everything you need to make a decision is there. If you like the trade, you just touch accept, and then that flows through to us, and then we get that order placed for you. So I think that covers the demo, and I want to show you how to get involved and then cover a few key elements here before I wrap it up. And I know I'm going to have a lot of questions. So Theta Trader software includes everything you saw: the Theta trades, the RTI, the trade simulator. Very unique tool. I've never seen that. You can backtest, six-legged option spreads. I mean, who's doing that? I don't know of anyone doing that. Value of over $3,500. And then, of course, you have those trade alerts. People absolutely love those alerts. They lean into them and they rely on them, and makes their life a lot easier. That's the whole point. I won't go on and on about it, but we get calls and talk to clients all the time. Oh yeah, I got your alert, and I was flying the plane. Your pilots responding to alerts, or I was in the supermarket aisle, or I was at my kid's soccer game, or whatever. Basically, you can run your own life. That's what the whole idea for the alerts. That's what they're all about. So again, these alerts are live, they're integrated with your account. The trades are tailored for you and your particular situation. All you do is touch accept, and then if their trade is filled, of course, the RTI can automatically manage it for you from that point forward. A value of over $4,400. So the software is Theta Trader with all the Theta trades and the RTI and the trade alerts, valued over $8,000. And then you have us as well. Probably the most valuable aspect of Theta Trader, I think, is the experience that we bring to the table. You have a private coach, a co-pilot that can work with you one-on-one, review your trades, help you choose particular trades or not, valued at least $7,500. I know people spend a ton of money on coaching and that kind of thing in education. I know people are spending $25,000, $50,000 on this type of thing. So this is very, very undervalued. We're all licensed and we're all doing this for decades. So the software with the alerts and the private coaching, This is a high-end package here, folks. This is not just like a chat bot thing where you just end up with an AI robot on a chat room. So that value over $15,500. And let's keep in mind, I talked about the trade scope and the daily commentary. That's our proprietary research. We have people asking us, that are not clients, how can I get this? How can I get it? Well, you have to be a client. So that very valuable day-to-day research, and that oftentimes that's all that our clients are looking at, is just that. So you may not have to have subscriptions to all sorts of other newsletters and things, but that's up to you. Then we have those online videos I told you about in terms of the help file and the education. So your Theta Trader membership includes everything we just talked about: the software, the alerts, the coaching, and the research, valued at $18,500. And we've done this in person many times before the pandemic, up to $4,000, and then $3,000. But we're going to do much, much better for you because this is a live online event, and we love doing these types of things. And we'll reward you with a great discount here for being with us live today. So this is the lifetime membership, 80% discount off that retail price. And it does expire, though. This discount does expire Friday night, but one low payment, $597. That's it. So here is the link, cf.altivest.com/TT. So please take a screenshot of that, of this page, and that's my direct phone number. So call me, and even if you call me now, it'll forward to someone else or it'll go to my voicemail. But if you had questions or comments, you're welcome to call me. But this is the link for the order form, simple one-page order form, and you have no excuse, folks. 30-day guarantee. So if you sign up, become a member, and something changes in the next month, let us know and we'll rebate that membership fee. We understand sometimes life happens, but really, if you're 90% thinking this is for you and it's a good fit, sign up and we'll get you that discount. And if something had to happen where you had to change your mind, that's fine. We're not twisting anyone's arm. It's not our business. Tax efficiency, how about that? We're going to jump into a couple of FAQs. Futures and options are tax efficient. Here's an example. If you're doing individual stocks in this particular example, and you have a 20% return, you make $20,000, you'll pay $7,400 in taxes if you're in the highest bracket, 12.6% return. Now, if you're trading with us, trading these options that we just talked about in the future space, your tax liability is $5,360, a tax savings of over $2,000, and that's because there's tax efficiency. Your gains are treated with the IRS section, was it 2450 or something, I forget, but 60% of the gains are taxed at the capital gains rate, which is always going to be lower than your individual income tax rate. So that's the huge benefit there. Just on that alone, people should all be trading in the futures option space. Huge, huge benefit, especially compounding year after year. No more itemizing. You get the 1099 with your to do your taxes, just your one figure. You plug it in, that's it. But always consult your tax attorney or advisor for details on that. What type of account? IRA, absolutely. People transfer those to us every week. So we can do IRA, absolutely, self-directed. Even Forbes says alternative assets using a self-directed IRA might help combat market volatility. So there's a lot of truth to that. And then again, why the E-minis? Why the S&P 500? They're liquid, efficient, and cost-effective. And in fact, they're bigger than all the ETFs around the world. And here's what I'm talking about. The E-mini S&P 500 compared to all ETFs around the world is still 2.5 times larger in terms of the average daily dollar volume, and 10 times bigger than the SPY. And there's many more advantages to trading these options. They're liquid, volume, you have access, superior execution. ES options offer a cost savings of $4 to $15 per contract compared to SPX. tight bid offer spreads, and they have the largest market share, 100 annual expirations, all the strike prices you need. So what that means is when our algorithm is searching for the strike prices and expirations that it wants to build these trades, it's going to find them. So, here's some calls and puts on a trade. Here's another set of puts and calls, another set of puts and calls, and so forth. So if the algorithm can't find the strikes it needs, then it can't generate a trade. And that would happen if you tried to apply this algo to just about any other market. And here's a big, big advantage to the dragonflies when you're doing the E-minis. It's one order. You saw how I'm just placing one order at one price. There's no legging in. You don't have to break up the orders separately like you do with stocks. You cannot do a dragonfly with stocks. I've tried it. I've seen other people try it. You can't do it in one order. You have to do it as two separate orders to get in and two separate orders to get out. It's just a mess. Here's another quick thing on retail stock options traders. Remember, this is talking about stock options. Retail stock options investors or traders only have access to the most basic call and put options. So what she's talking about there are all the different levels, level 1, 2, 3, or is there a 4? I don't remember. So you don't have access to option spreads or other more sophisticated strategies. So what I just showed you, you can do six-legged spreads with us, and you have immediate access to these professional, sophisticated option strategies using ThetaTrader. Another big advantage, of course, trading just these indexes on the E-minis, it's just one or two markets. Your margin versus stocks is efficient, and there's a clear cost structure. Remember, these are not securities, or these are not individual stock options. Okay, so every order here goes through the electronic Globex exchange at the CME group. Your orders are treated equally. There's no payment for order flow. And folks, if you're trading stock options and stocks and whatnot, I mean, that's fine, everyone does, but it's not free. People tell you it's free, but it's not. There's something called payment for order flow. And she says the most popular trading apps generate a lot of revenue from payment for order flow, and they can make more money from options than regular stocks. And so there's an incentive for them to lure investors into stock options trading. So she's talking about stock options. So they say it's free, it's not free. Orders are executed at prices inferior. You're trying to save a penny, but you end up losing a nickel. Payment for order flow is disguised commissions. If you want the broker to work for you, pay a commission. Nothing of value is truly ever free. So the point is, with us, there's no payment for order flow, none of that nonsense. And our rates are 5 1/4 round turn all in. And I'll pause real quickly here. See this? I copied this from another website, a big box brokerage firm, and they say their rates are 2 1/4. And you think, well, that's a lot less, Eric. You guys are expensive. No, that's per side. And then they add more fees on top, like clearing and exchange fees that they don't even disclose. I don't know how they get away with it, but it ends up being more than what we charge. So our rates are very competitive. And I should also point out that everything is net of commission. See the yellow highlight. Everything in ThetaTrader is net of all trading costs. Everything you saw in the demo, percentages, the dollar figures, everything. And of course, everyone performs differently using ThetaTrader. It's for self-directed traders making their own trading decisions. And what size of account? We recommend a minimum 25,000. And if you want a membership rebate, we can gladly do that. We love people taking us up on this offer. We rebate the whole thing to you if you have $100,000 or more in your account, or a 50% rebate if you do 50,000 to 100,000, or I should say 99,999. And different types of accounts, absolutely. We talked about IRA, individual, joint, corporate, trust, LLC, all the above. And then we'll kind of wrap it up. I'll jump into some questions, but if you want to stand back and look at the bigger picture, why would you even want to do something like ThetaTrader with these kind of non-correlated strategies or these non-traditional investment strategies? Why would you even want to do that? Well, it says here, alternatives in your portfolio may improve diversification and lower portfolio risk. But a risk of what though? What's the risk? Well, how about inflation? Look at this, from year 2000 forward, the dollar here, the consumer dollar purchasing power has dropped 40%. Hourly earnings, inflation is so high. Look at, relatively speaking, your average hourly earnings here are just crashing, negative. Services CPI at its highest since 1982. The Fed's Waller says the market's overreacted, and we've got a long, long way to go in terms of rate hikes. B of A says inflation could take us well into 2024 and weigh on stocks. This is kind of interesting. Talking about a Fed pivot, talks of a Fed pivot are not about the Fed going from raising rates to lowering rates. It's going from raising rates at a historic pace to raising rates at a near historic pace. Regardless, they are raising rates into a recession. 7.7% inflation is still dangerously high. So absolutely. So we've got that inflation shark just chewing away at us. It's much, much worse than what the headlines suggest, by the way. And I think we kind of all feel that. And the 2 and 10-year yield curve, it's inverted. And when that happens, that's a harbinger of a recession. We're at negative 67, haven't been that low since 1981 or 1982. Deeply negative, recession could be severe. Again, that 2 and 10-year yield spread is a big deal to follow. 50% of CEOs say they're cutting jobs in the next 6 months. CEO confidence fell again. It's its lowest point since 2007. Look at Meta laid off 11,000. They lost 700 billion in value. Amazon says warns recession is looming. They cut 10,000 employees. They just lost $1 trillion in market cap. Incredible. FedEx is furloughing drivers through Christmas. I mean, this is the busiest time of the year, and you have to lay off or furlough employees at FedEx. That's crazy. Disney is laying off employees, losing billions in operating losses. This is crazy. NVIDIA earnings are chopped in half. That was amazing. Target net income dropped by 52%. Wells Fargo here is warning, just begun to see the layoffs and squeezes on profit margins. Manufacturing PMI, lowest in history. Goldman says they're now forecasting more rate hikes. Anyway, I'm just going to go on and on. Jamie Dimon says we're going to be in a recession. Look at all these companies with massive layoffs. Twitter, Cameo, Robinhood, Intel, Snapchat, Coinbase, Opendoor, Stripe, Lyft, Shopify, Meta, Apple, Amazon. Layoffs or hiring freezes, credit card debt, record interest. I mean, I won't go into this, but I'm just trying to make the point that at least from our perspective, things are going to get worse, folks. And I think that's why we love the idea of Theta Trader even more than ever, and having those go anywhere strategies where you don't have to be just tied into the same passive long type of investing. Maxed out credit cards, personal savings. Look at this here. Personal savings at record lows, credit cards at highs, paycheck to paycheck, auto loans. I won't go on and on, but this was today. The Fed's Bullard says the terminal rate for the federal funds rate could be up to 7%. He said 5 to 7%. So, I mean, he's leaving that's a pretty wide door. They were kind of thinking it would be 5, and he's suggesting 7. So we'll see. So I won't go into that. So basically, he got hawkish to even more hawkish. Housing market. I don't know. Do I really need to go through all these details? But this one maybe. The real house price index is greater now than in 2006. House price to rent ratio is greater now, and the house price to income ratio is greater now. So this was considered a big housing bubble. Remember in 2006, 7, but we're at levels that are higher than that now. Consumer confidence, home builder confidence. Look at that, crashing. Housing market index. Anyway, I could probably just sound like all doom and gloom here forever and ever, but really want to get to this, and then we'll wrap it up with a few questions here. Mortgage rates surging, you know how that goes. Net worth, consumer sentiment, recessionary plunge in small businesses. This was interesting. The shipping rates from Shanghai to Los Angeles have fallen 83%. That's crazy. That's just no demand. There's nothing going. There's no product flowing. There's no demand. Demand destruction is what they call that. Inflation is so hot, people are keeping the wallet in their pocket. Stanley Druckenmiller says a deeper recession in 2023 than many expect. If you don't know who he is, I'll show you in a second. But that's why we like the low correlation to alternatives that something like Theta Trader can offer. You need to do something offensively here, I guess, is what we're saying. If not, defend your portfolio, or a little of both. But you need to try to avoid these large drawdowns, sidestep those bear markets. It can take 6 years, 5 years. For example, here's the tech crash in 2000, global financial crisis 2008. It can take 5, 6 years to get back to where you were. But look at this. If you bought the Dow in 1929, before the market fell, it took you to 1954 to get back to even. So the idea that every dip should be bought and it always goes up in the next year and you'll be making money again, and back in the in the black, is not necessarily true. Here in 1966, if you bought stocks, you had to wait till 1982 to get back to even. So you want to avoid these drawdowns. I mean, if you're down 50%, you're gonna have to make 100% return to get back to even. So Stanley Druckenmiller says there's a high probability the stock market could be flat for an entire decade, and it'd be wise to heed his warnings. If you don't know who he is, he had an annual average return on Wall Street of 30% from 1986 to 2010. And by the way, he did that with hardly any drawdown, without a losing year, if I recall. That's just phenomenal. And remember too, that 60-40 strategy, you have 40% in bonds. Well, that's not going to help you right now either. You get the worst return in the last 100 years with that strategy. Could be the lost decade for that 60-40 approach. This fund giant here, Elliott, they're warning about hyperinflation. Here's kind of an analogy here with the black line here, as you can see, is our current market, and then the blue line is the 2008-2009 bear market. So we seem to be following very closely that path of the 2008 bear market. In fact, this is, I think, from a week ago or two. So you might see that black line updated. It might look like it's just sitting right on top of that blue line now. Very interesting. And of course, past performance is no guarantee of future results, but sometimes history rhymes with the present and the future. Look at this. The put to call ratio spiked to its highest since 1997, just yesterday. So people are buying lots of protection. So we don't like 1 or 2. We like portfolio 3. You should have something invested into alternatives, and that's what we like about Theta Trader. It's definitely an alternative approach. It's non-correlated. They call it absolute return, meaning you can have strategies in there that perform in certain environments, not related to the stock market always moving higher. So that's what we love about Theta Trader. All market conditions, pre-selected spreads, automated exits with the RTI. Remember, it turns red or blue and then you're out. And integrated trade alerts, people love those. And it's all tied together with personal coaching. You get to actually talk to us. We're real people. And these are the 5 steps to get involved. You simply complete this order form here. You get your Theta Trader login. Then you receive an email on how to open your account. It's all electronic. And then once the account is open, you fund the account either with a bank wire or an ACH, and then you begin trading. So here is the final slide there. And let's see if we have a few questions and comments that I didn't get to already. Just a moment, folks. Yeah, you can. We can use this in the UK, absolutely. A good question. Unfortunately, we can't trade with Canada. I wish we could. And let's see if there's any other comments or questions there. I'll make one other comment too about the email. I will receive this at info@altivest, but my direct email is Eric, E-R-I-K, @altivest.com. So ERIK@altivest.com. Again, that's my phone number there. And this is the link you use. Just go right on over. And if you like what you see, we'll get you set up. And we've had people sign up and starting to trade the very next day. They get the account open, they get it funded. So it can happen very, very quickly. But I think it's a great opportunity to have an alternative approach kind of in your back pocket, something like this tool that's user-friendly, it's intuitive, taking something complicated and simplifying it and giving you access to it, something that otherwise only proprietary groups or hedge funds or institutions or high frequency traders or whatever, uh, they're using these types of option strategies. Well, not the high frequency traders, but other groups are using these types of strategies. Just like you saw that woman on CNBC that mentioned how the professionals are doing it this way. So that's how you want to do it. That's how we want you to do it. We want you to be with us for many, many years, and think you'll enjoy. If you're doing options, you can certainly enjoy using DataTrader. If you've never done options, again, we have tutorials to help you, and we can help you learn the ropes and take it from there. Let's see if there's any other comments or questions. Just a moment. Yep, I see the links in there. Thanks for getting those links posted. And I appreciate you being here. So I think we'll wrap it up. I don't see any other questions that I didn't get to already, unless there's any last minute thoughts or comments. In fact, there's going to be a survey afterwards. I'd love to get your feedback on the presentation. It helps as I inform me on the next presentation, and maybe I can improve. Well, I can always improve on this, that, or the other, something you liked, whatever you didn't like, but I'd love to get your thoughts on the survey as well. And this does expire tomorrow night. So you have a moment to call me, email me if you had comments or questions. That's why we do that, give you some time. But we do make it limited because we'd like to do this live, keep the presentation up to date, and reward people for being here live with us as well. Let's see if there's anything else. No, it's not $597 per year. It's only one time. Theta Trader lifetime member, only one low payment. So it's a lifetime member of one payment. So you pay $597, you're a lifetime member of Theta Trader. And you have access to everything we just talked about. So yeah, good question. All right. Let me know what else I can do for you. If you have any other questions, I think I've answered everything, and we'll let you go. Have a great rest of the day. And I think I've kept you here long enough, but thanks for your attention and your interest, and we look forward to hearing from you. Have a good day. Bye-bye.